Markets are trading with a cautious tone as investors continue to navigate a complex mix of geopolitics, central bank expectations, and elevated commodity prices. The dominant macro theme remains the Middle East, while President Trump has suggested that a broader agreement with Iran, including an extension of the current ceasefire framework and a reopening of Hormuz, could be reached within a week. Markets remain skeptical after repeated delays and conflicting signals from regional leaders. Oil remains the clearest expression of that risk. The sustained rise in energy prices increasingly feeding into inflation expectations globally, creating an additional challenge for central banks already grappling with sticky price pressures. In FX, the dollar is broadly steady, reflecting the market's reluctance to take large directional positions ahead of clarity on both geopolitics and the policy outlook. Dollar yen remains the key focal point, hovering near the 160 area, with Japanese authorities again emphasizing close coordination with Washington and signaling readiness to address excessive currency moves. Equity markets are showing some signs of fatigue after an impressive run. Futures are a little softer today, led by technology, even as the structural AI theme remains intact. Investors continue to balance strong capital spending commitments from major technology firms against richer valuations and a more uncertain macro backdrop. In commodities, gold continues to attract two-way flows. The metal is finding support from geopolitical uncertainty and central bank diversification demand, while higher inflation expectations are offsetting some of the benefit from lower bond yields. The result is a market that remains well bid, but highly sensitive to shifts in both risk sentiment and the rates outlook. Overall, the macro landscape remains defined by three interconnected themes: geopolitical uncertainty centered on Iran and the Middle East, the inflation implications of elevated energy prices, and questions of how much flexibility central banks retain if commodity-driven price pressures continue to build. Until there is a greater clarity on these fronts, markets are likely to remain headline-driven, with FX, energy, and rates markets continuing to set the tone for broader risk sentiment. That's all for now.